So I had a friend ask me to help them out with some trading indicators, and I thought, well, I couldn't really send over the file because it was too large, so I had to upload to YouTube and share the link. So I thought I might as well share these links with everyone so they can benefit also. Um, so we're going to focus on the volume profile. I just thought it'd be interesting before I did that to show you guys what your returns would be like in traditional markets. So this chart here is showing you your 10-year annualized returns. It's a bit outdated, but these figures are still roughly the same. And so if you look at the S&P 500, for example, per year, your average return would be 7.4%. To be honest with you, yeah, you'd be lucky to get that, especially in the current market state. So what's interesting is if we compare that to the returns from cryptocurrencies, and I know everyone's going on about how it's all a bubble, it's a scam, it's this and that. It's irrelevant. It doesn't matter if you think Bitcoin is going to take over the world or if you think Bitcoin is a pile of, yep. The important thing to focus on is the volatility. If you were to trade in traditional markets, if you were to trade in Forex, for example, per day, intraday trading, like to make a 1% return would be great. Bitcoin, for example, it probably moves 1% every 10 seconds. And so what you're interested in is volatility. The more volatile, the more potential there is for you to make money. Again, to be fair, there's more potential to lose money. But for example, Pantera, since 2013, were able to give their investors a nice little return here. Again, just to compare, 24,000 over 3 years to this. And so just to quantify what that looks like, 24,000, you invest 1,000, there's a return. And so just to prove that I kind of know what I'm talking about, so my 6-month returns, give or take, were about 2,854. Again, 2,854 from 1,000, there's a return. I was trying to find one specific trade which I thought was crazy. It was, if anyone's interested, in a coin called Cardano. And within 1 month, this coin had given me an 11,000% return. So in 1 month, if you had invested £1,000 into that coin, that would be your return. So I'm just trying to identify or highlight the potential here to make money. I mean, that's rare, I guess. Well, I mean, look, there's potential there for everyone to make a ton of money. And so that's kind of why I thought it'd be beneficial to share these videos. And again, if you're still having doubts about how credible I am, I trade in the barbershop, bros. Must be a pro. But no, this is fairly advanced, so I don't expect many people to understand what's going on here. Again, this video was intended for a particular person, and so I'm going to cover the volume profile, and I will do more videos later on regarding the basics. And so the volume profile just shows you pretty much, okay, well, first of all, let's compare the volume profile to normal volume. And so normal volume will show below here, and it will show you, so these candles here, the price candles and the volume candles represent whatever time period you choose. So on a 4-hour chart, each candle here is a 4-hour, the price action during a 4-hour period. Again, same for the candles. And so the volume profile essentially displays trading activity over a specified time period at specified price levels. And what I mean by specified time period is that the volume profile here is known as a visible range. And so it will show you the volume over the range that is visible. And so if you zoom in or zoom out, the range that's visible changes, and therefore so does the volume profile. The benefit to the volume profile is that it shows you the volume at specific price points. So it identifies levels of significance as opposed to traditional volume bars, which just show you that there was a lot of buy volume or a lot of sell volume at this time, which isn't really much good, which is why I don't even have it on my chart. So yellow, sell, blue, buy. This area here is shaded because this area represents the value area, which is essentially where 70% of all volume was traded in this visible range. These large candles here, the largest, sorry, So these are all known as volume nodes. High volume nodes extend further out. Low volume nodes barely extend. And so the largest volume node is known as the point of control. And this is where most of the volume was traded during this visible range. And I've adjusted my settings because I don't need the lines to tell me where things are. I just make my chart messy. But if you have them on as default, the white line here, the point of control, the blue lines represent the value area, also represented by the different shade, and the red line represents the developing point of control, because the value area and the point of control are constantly changing as price trends up or down. So the main use for the volume profile is just essentially, first of all, it's not necessary. You can easily see, if you've been doing this for not even that long, I guess, levels of support and resistance just by looking at the candles or looking at the chart. I mean, you can see here the market tried to trend up. There was resistance here. Here tried to break this low, it couldn't. There was support here, and so on. And so this is also represented in the volume profile. So the volume profile shows you where the liquidity is. It shows you where most of the orders were taken. And so it just makes it easier to identify the levels. And it also makes it easier to identify more specifically if you really want to drill down and find a specific price point where price is likely to find support or find resistance, depending if we're trending up or down. What you can do is you can go to find an area where the largest volume nodes are, which would be around here or here, and you can identify your first level of support around this area, your second level of support around this area, and then you can zoom into your candles and start trying to find your level of support or resistance. I'll probably cover that in another video. And the interesting thing is you can also get an idea of where stop runs or stop hunts might go. So a stop hunt might come and collect orders from this order block here. There's liquidity here. So the other thing also is if you're using it on a margin exchange, you can see where, at this level, there were a significant amount of shorts taken. And so the shorts are currently getting squeezed. And you can deduce from that, if you assume a leverage amount, where the shorts are, where the liquidation would be for the shorts or the longs, or depending on which way the market is trending. But that's basically it. I mean, there's probably more to it, but I don't want to talk for too long. But yeah, I think the next thing I'll cover is the risk management, probably, or levels. Probably start with risk management because no one's trying to lose money out here. So yeah. Also, if you think I've made this stuff up, feel free to send me a message, and I'm more than happy to send you my trade history so you know that it's not all garbage. So yeah, peace.